You got me running, shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right. Good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call. This is episode 356. It's the 17th of August, 11 a.m. right here in Singapore, GMT plus 8. All right. So if it's your first time here, big welcome. We do this currency call every Monday to Friday. And the currency we analyze is as follows: Monday, Aussie and Kiwi. Today is Tuesday, so it's the Euro. And Wednesday, Pound, Thursday, Yen and Gold, Friday, Canadian Dollar, and cryptocurrencies. All right, so this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. Here, we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so first off with the key news item of the week, let's get Kim Hong here, currency analyst at LCMS Traders, to share about the New Zealand cash rate, which will be releasing tomorrow, 18th of August, 10 a.m. GMT plus 8. All right, Kim Hong, pass it to you.
All right, thank you, Junwei. Okay, the Reserve Bank of New Zealand, okay, they will be announcing, yes, their cash rate tomorrow at 10 GMT plus 8, okay? Now, if you guys have been like watching the news, reading the news and things like that, you know, there's a high speculation out there that says that, you know, the Reserve Bank of New Zealand will be hiking interest rates, okay? Personally, I share the same sentiment, okay? I think this is a very high chance that they will increase interest rate, okay? Now, why is that the case? If we remember, okay, if you recall that during the previous meeting, they have actually ended, okay, not reduced, not cut, but ended their large-scale assets purchase program, which is basically the New Zealand's QE program, okay? Normally, for many of these central banks, they will actually tone down, cut down on their quantitative easing, okay, the amount of bonds purchases before they will actually consider increase interest rates, okay? And then, you know, as they cut down on QE purchases, and then they might hike a bit of interest rate and then continue cutting back on quantitative easing purchases, okay? Then eventually, so basically it's like QE cutting and interest rate hiking goes like hand in hand, right? But for the Reserve Bank of New Zealand, okay, to many surprise, they actually ended the whole QE program, okay? So some says that, you know, they are actually, the central bank is actually reacting to the hot recovery, okay, of the economy in New Zealand, okay? As you guys know, as we all know, okay, they have been doing a very good job in terms of handling the COVID cases in New Zealand, okay? And because of that, they are able to open up their economy, okay? So based on the recent economic indicators, okay, we know that, you know, inflation has rose to 10-year high, okay? Employment rose at the fastest in 2.5 years. Unemployment rate right now is back to the pre-pandemic level, okay? So economic recovery is very, very strong. Strong to the point whereby the central bank is actually worried about overheating of the economy, okay? Now, so how will this whole rate hike actually help in toning down the overheating of the economy? Okay, so earlier on I mentioned, you know, that they are successful in containing the whole virus, okay, because of their tough border policy. You know, they shut down their borders, you know, from all the other countries, neighboring countries, and things like that. But these actually lead to one issue. Okay, this actually led to a shortage of labor. Okay, because migrant workers are unable to enter New Zealand. Okay, so as a result, during this period of time, there was actually a surge in demand. Okay, which led to the economy running very hot. Okay, so that's the first reason. Second reason, okay, it's not something that, well, I think a couple of months ago there was this whole issue with housing prices, okay, property prices in New Zealand, okay. So property prices has been rising like, I don't know, nobody's business and things like that, okay, because of the government's, I would say, incentive, okay, to lower down some part of the taxes and things like that, or even to exempt taxes from purchases, okay, home buyers, all right. So, this actually lead to, I mean, in any parts of the country, if let's say your government were to lower down, property taxes and, taxes that, home buyers have to pay when buying their houses, then of course that will lead to a high increase in demand, right? Because I mean, at the same time, there's this low interest rate going on, right? Low interest rate, low tax, hence, it's a good time to step into the property market. So that actually led to, a high demand of property from the homeowners, okay, from investors. So with the hike in interest rate, okay, this time around from the central bank, that will actually at the same time increase the borrowing cost, okay. So I mean, right now, Reserve Bank of New Zealand is holding interest rate at 0.25. Now, if they were to hike interest rate by another 0.25%, which is to 0.5, okay, tomorrow, then it will cost more for property buyers, right, to take up mortgages and things like that. Because don't forget, the hike in interest rate by the central bank affects all interest rate across the board, okay, across the board. So that will actually help in toning down the hot property market that is ongoing at the moment. Well, they are actually trying to prevent the property bubble from bursting and things like that, right? So with strong economic data, with all this, with the whole economy running hot and things like that, it is likely that the central bank will be increasing interest rates, okay, tomorrow. Now, then the next question we will be asking is by how much, right? Likely 0.25%. I mean, there are some speculators out there that says that the central bank may actually be increasing half a percentage point, like 0.5%. So it'll be from like a 0.25 to a 0.75% jump. Personally, I feel that it's too much. Okay, why is that the case? Yes, no doubt, COVID cases has been, contained, okay, in New Zealand. Actually, to be honest with you, I just saw a breaking news 30 minutes ago. It says a positive case of COVID-19 has been identified in the community in Auckland. Health officials are investigating. You see, that actually shows the uncertainty of COVID, of this whole pandemic, right? Now, if the central bank were to be very aggressive in their interest rate hikes, increasing it by 0.25% or even more, touch wood, if bad things were to happen again, if there's a mini spike, I would say, in the number of cases in New Zealand, then what is the central bank going to do? Are they going to cut interest rate back down again? Or are they going to, bring back the LSAP program, which is readily available in their toolbox, okay, from what Governor Orr has just mentioned last meeting, okay? So with all this uncertainty still looming, okay, the central bank is likely going to take one small step at a time. Last month, they stopped QE, which is quite, I would say, aggressive, okay, to the surprise of the market, right? This time around, chances are they're going to just increase by 0.25%. I would actually be surprised if they don't do a rate hike of 0.25%. If they were to hold interest rate unchanged at 0.25%, that would be, I would say, a bit of a surprise, because like for the reasons that I've mentioned earlier, that may actually lead to further overheating of the economy, of the New Zealand's economy. Okay, so expect a rate hike from the Reserve Bank of New Zealand tomorrow. at 10 GMT plus 8. Now, so you might be wondering, a rate hike is actually good for New Zealand dollar, right? So does that mean that, if I'm trading New Zealand dollar, do I look to buy? You certainly can look to buy, because that is definitely, I would say, will lead to a strengthening in the currency. But don't forget, okay, the market has been expecting this rate hike since last month, ever since they actually do a surprise halt to quantitative easing. So because of that, okay, if you guys are actually going to plan to trade the New Zealand dollar, be it against the yen or US dollar, okay, try to keep your trade short term. If you are scalpers, just scalp a bit and go off, because there's a possibility that the market has already priced in this rate hike. Okay, now if they were to do an aggressive hike of 0.5%, okay, then the strengthening of the New Zealand dollar may actually be more sustainable, I would say, because the market in general right now is not expecting such an aggressive move from any central bank, even from the New Zealand central bank. Okay, so all in all, I still feel that if you guys are planning to trade the RBNZ monetary policy announcement tomorrow, keep your trade short term. Okay, and also pay attention to this. There will be a press conference at 11 GMT plus 8. Okay, during that time, I expect volatility in New Zealand dollar. Okay, because governor, or if they were to carry out a now, whether or not the central bank carries out an interest rate hike, or or just going to keep interest rate unchanged at 0.25%, the central bank's governor, Governor Adrian Orr, is definitely going to address the public in terms of their actions. So if they were to hike, he's going to explain why the hike necessary and things like that. Chances are to prevent the economy from overheating. Okay, if they were to keep interest rate unchanged, why unchanged? Given that you can expect questions like, given that the economy is overheating, why aren't the central bank doing something? Why isn't the central bank doing a rate hike? You can expect such questions coming from the press, okay, during the press conference. So yeah, definitely the chances are there's going to be volatility, price moving around coming from the New Zealand dollar. Now, as you guys know that the New Zealand dollar is to a certain extent correlated to the Australian dollar. Okay, so pay attention to the Australian dollar as well. Okay, because the movement of New Zealand dollar may actually cause movements in Australian dollar as well. Okay, now with that, yeah, I just want to highlight one final point. So yesterday I actually talked about a Aussie Kiwi trade. Okay, and I was telling you guys, you guys should actually decide if you guys should close a trade or not, and things like that. Now, so in the end, yesterday it actually hits a TP of 100 pips. Okay, so yeah, it's just an update on yesterday's trade. So if you guys are not in the Traders Club and things like that, consider joining. Do join us in the Traders Club, where I'll update you guys when there's any movements of trades and things like that. Okay, now that's all I have. I'll update you guys on tomorrow. Yeah, I'll update you guys tomorrow on the outcome of the Reserve Bank of New Zealand. Okay, with that, I'll pass it back to Jinwei.
Okay, thank you so much, Kim Hong. I think I would say everybody will agree it's a very useful preparation for us for the news ahead. And yeah, I'm just going to paste up the link for Traders Club in a moment. If you don't want to miss out on the trades Kim Hong puts up in Traders Club, you need to join the Traders Club. All right, so next time I'm going to get Scott here, Scott Andrews from Forex Briefcase Australia, to share more about the dollar index. Scott.
All right, hi everyone, and thanks for joining us again too. So, in regards to the US dollar index, it'd been somewhat of a dynamic session last night, where we saw the equity markets, they were pulling back at the very start and in pre-market trading. So after around 8 o'clock in the evening last night, GMT plus 8, we saw a little bit of a pullback, which typically sees the US dollar get a lift, and we can see that in the hourly time frame. But then we saw it later in the session, early this morning, Singapore time, there was a pullback, but now actually we're just seeing a small lift here. And I actually mentioned that, seeing the US dollar pull back a little more would be, not a bad thing to see, and what I somewhat expected. But we've seen, really it's tough to break through that 92, 45 level to 92.50 level. Now, right now, what we are seeing is that the Australian equities market is pulling back as well. So what we can see with that relationship is that when that happens again, we see the Aussie dollar selling off. Now, we did talk about the Kiwi, the New Zealand against the US dollar, as a potential trade idea, but it seemed just with the price action, and Daniel and I and the team were discussing this before the call, and it looks like that markets are very sensitive to that with regard to the Delta variant, and it's going to be interesting to see how the Australian market behaves with that. But in regards to what we're seeing here, most of the price action is quite subdued. It's a constricted range. If I bring up the 4-hour time frame, as you can see, we have seen a bounce off that low that's recently been seen. But on the daily, we're in this tight range here. And what's really needed to happen is that someone from the FOMC, in particular, really Jerome Powell, is going to have to sort of insert some language regarding tapering, because they've probably got a bit of breathing room now with that Michigan consumer sentiment and expectations miss. But we've got tonight, we've got the retail sales coming out, core retail and retail sales. So it's going to be interesting to see if we can beat negative 0.2 and 0.1. And if that's the case, it's obviously going to help hold up the US dollar. And then later tomorrow morning at 1:30, we've got Jerome Powell's actually speaking. But then we were discussing what the big thing is for this week, and it's the FOMC meeting minutes are out Thursday morning at 2 a.m. GMT +8. So that's going to give a little bit more insight into the situation. But for now, like Im Hong mentioned, the short-term bias is probably fair, because things is really are changing quite dramatically. You've got equity markets really extended. So, some deep pullbacks could happen in a session, and that's going to really throw out some mixed signals to the market. So be cautious and, wait and see what happens with the RBNZ. If it's an aggressive increase, then we could see some opportunities there for a long. But US dollar stable until those FOMC minutes come out is my thought here for now.
Hey, thank you so much, Scott, for the dollar index. And yeah, today's Tuesday. The currency in focus is euro, and I'm going to get Daniel here, trading coach at LCMS Traders, to share more about the euro. Daniel.
Okay, thank you, Junwei. So let's look at quickly, we have heard from Kim Hong and Scott. Let's look at quickly at the calendar. Okay, for today, what I'll be looking at for the euro would be the GDP numbers, quarter on quarter, Q2. No surprises there, and mostly holding at 2%. Indeed, today, 5 o'clock, GMT +8. Again, really looking at this one, don't really think right now. If it's just plus minus 0.1, 0.2%, probably going to be quite a muted event there. Of course, unless we get 3 or 4%, very much beating the forecast, then you probably see a eurozone, the euro dollar will strengthen. But however, I think that's the chance is pretty unlikely coming in. And then quickly looking down for euro news to compare to US dollar as well. Of course, like I said, retail sales, I'll be looking at core retail sales coming in. It is coming at muted at 0.1% compared to previous months of 1.3%. But nonetheless, watch out for it. If the US core retail sales getting better than 0.1%, we could probably see a slight increase in strengthening of the US dollar. So that's something we need to take note of. Then Wednesdays coming in, it's looking at euro, CPI data. The CPI data coming in, that's why I'm looking at GDP. Probably not, because look at it, the CPI data, they're forecasting at minus 0.1%, not increasing up, which just suggests that the economy may not be doing recovering as well as they like it to be. So that's why looking at it, not going to be, I think euro quite to be muted and maybe weakening against the safe haven currencies such as the US dollar and the yen currency pairs. Okay, then let's look at Thursdays. Nothing much there. Of course, you got jobless claims for US Philadelphia Fed Manufacturing Index, something to watch out for. And then on Friday, coming in, nothing really against the euro dollar. So again, this week we are looking at the GDP numbers, the CPI numbers for the euro dollar, and then the retail sales coming in for the US economy. Okay, so let's look at the charts right now. Quick look at it. Now, in the Euro USD charts, when we look at this charts here right now, you can see it's quite evidently here coming down. Euro, it is weakening. Of course, this previous blip up was because of last Friday. Michigan consumer sentiments was pretty bad. Market reacted to it, but you can see fundamentally, euro is still weakened against the safer currencies such as the US and the yen, and starts to come back down. Now, what we're going to look at is most likely going to move downwards towards 1.1757. Moving slowly downwards. This is what I talked about just yesterday night during the group coaching sessions, and most likely will come back down, move across slightly, waiting because GDP numbers probably not too much until at night, and for the retail sales coming in the US and the Thursday GMT plus 2 o'clock in the morning, where you probably could hear some good news. I hope so, that FOMC news coming in. Okay, if they come in, talk about tapering and kind of stuff, and then you can see US dollar continue to strengthen, moving downwards towards the previous low. So what I'll be looking for right then will be on Wednesdays, tonight, retail sales, and then continue on with the Wednesdays. Thursday morning, coming in, will break below the 1.1757, perhaps around 1.1745. We could be looking for a very nice 30 to 40 pips of stop loss, coming in at already another 30 to 40 pips of take profit target, because this is really for FOMC news coming in, so we're going to be trading in. I'll be looking for really a US dollar strengthening. That's the first target, and then if it at this 30 pips here coming in, if it continues to show strength in the US dollar, I will push all the way down to almost to next support level zone here, probably a 90 pips. So you can see here when I say about 30 to 40 pips stop loss, going for a target of 80 to 90 pips of take profit target, really is 1:2 risk reward ratio. Again, really strong bias towards euro weakening against the safe haven currencies. Now we're going to look at euro yen. Again, really very nice right now. Let me zoom it in right now here. Okay, sorry. Click on the wrong button. Okay, there you go. Let me shift this away, and then let's zoom it in here. Now you can see really very nice euro yen. It is in my support zone, waiting for things to happen, right? So again, GDP numbers coming in, and perhaps if worldwide the economy is not going to do well, it's more likely going to move inside within the support zone. Really very nice here. If I go to zoom it in here, you can see on the 4-hour candle, really it's almost as if there is a small pennant coming in. If I want to say a pattern, something like that, it's consolidated. Basically, there is some form of consolidation right here, right now. My bias right now is perhaps, it could be moving upwards or within the support zone, but my bias will be going to be breaking down, waiting for it to break past the support zone here, and then going past the 128.6 support zone. Looking at this really nice chart here, what I'll be looking at here is break it down whereas wait until it break down below 128.30. Somewhere here, break past really my zones coming in. I'll be going for quite 50 pips of 40, 50 pips of take profit stop loss here, going for quite 100 pips of take profit, because if it's going to break through it, it is going to be a very significant reasons for it. Close below 128.3, going for 50 pips stop loss, 100 pips take profit target range. So looking at it, really continue the same conclusion. Looking this week here to our euro to be still weakening against safer currencies such like yen and the US dollar. So that's all for me.
Okay, thank you, Daniel. So disclaimer, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers here. So please remember to do your own analysis prior to entering any trades. Okay, I'm going to just get Daniel back in again. I understand that yesterday you guys in the Traders Club went through a coaching session. So would you like to share some stuff here with the audience here today?
Yes, of course. Yesterday we had a group coaching sessions on Monday. So, in the LCMS Traders Club, we have actually an interaction with the members. On Monday, we have the group coaching sessions, and Wednesday with the live trading sessions, all looking at the market, what we'll be preparing the market, what's going to what could happen, and then what have reacted, we can react and trade together. So really to guide the current market conditions, identify trades, and literally make profits together, right? So, yesterday, what will happen? Let me share the charts. There were a couple of things that we looked for all the currency pairs, and in fact, yesterday we also were looking at all the cross pairs as well. But just down here, maybe I share one or two trade ideas with you guys. Euro Yen, we talk about there. Another one we were looking at just discussion alone. We had a member looking at buying at a US CAD. We had looked at discussion, and we actually mentioned that we said that hey, we could look for a very short-term trade because fundamentally oil demand seems to be dropping, so could cause the Canadian dollar to be weakening there. And then we say that hey, short-term trade for the night, going up, perhaps going into towards maybe a 30 to 40 pips of take profit target and keep a tight stop loss like 20 to 30 pips of stop loss. And moving up, and it did actually last night, moving upwards towards 1.2596 right now. I was looking at treating this resistance of 1.2612, and I say it's a short-term trade, 20-30 pips of profit at stake. I think I need to exit out. Pretty happy that it turns out that way. Okay, that was a short-term trade, but we're looking for the moving forward, the CAD Yen. Okay, CAD Yen, we were looking at a term where the oil prices, you can see it is hitting the resistance zones. However, it's a really strong declining of the oil prices. Reason is because it seems that the recovery is not doing that well. Worldwide recovery is not doing that well, causing the oil demand to drop. Right then, we were waiting for it to break below the oil resistance of 65.78. If it does move that way, CAD Yen could move all the way down towards the next support level. So I remember we were looking at this one here. Say if it goes past close below, I think it was like 86.8, I believe. I think so. I can't remember right now. I won't give you the details there as well. Like 30 pips and then going for a 60 to 70 pips of take profit targets here. So looking at it continuous down towards the support zone. And last one I'll share with you is the Aussie Yen. Now Aussie Yen, overall Aussie not doing too well. We look at the fundamentals of the Australian economy, and with the COVID shutdowns and the economic data doesn't seem to do well overall. So we were looking, and it broke. It was at that point in time breaking past the resistance support level of 80.20. Down here, we were looking at it probably come down, retest again, okay, and push all the way down. And this is what's happening right now. And in fact, that's why I said, don't take the trade now. It most likely goes back resistance, go past the key level of 80. Okay, 80.00. Okay, if it breaks down, you could probably take a trade, and it is already activated right now. So, for those who are not already with us in the club as a member, do come and join us together. To join, for those already in the membership, remember, it's so very beneficial in preparation in your trading. Do come and join us. So now, for those who are not already with us, let me tell you, all you need to do, okay, is join us at this LCMS Traders Club. The tradersclub.lcms.com.sg. This club and access to this platform is really worth thousands, but right now it's a chance to join it only at $49 a month. Of course, we not only have the community here, we have many other things like the Forex Signals, live webinar, a lot of daily analysis coming in, all for you to prepare your trading every day. Now, this is without the doubt the least you must do, and join to ensure you achieve your best in your trading. Now, this price can change anytime, so click on this buy button where I click there at $49 a month, fill it in, and get on board right now. See you in the club.
Okay, thank you so much, Daniel. Yeah, I pasted the link in the chat, so just check it out. Check out the website, and if you're interested, subscribe from there. Okay, we have come to the end of the session, and we'll see you guys tomorrow, which is going to be Wednesday, for the pound analysis. Thank you so much, and goodbye.